Good morning, everybody, and welcome to today's Monday morning mortgage message. This is Sean Woolen with the Woolen Mortgage team here at Waterstone Mortgage. And today we're going to talk about what's happening this week, what rates are doing, and a few tips and loan programs to help you through this crazy market that we are in. And boy, it is getting hot. And I'm not talking about just the weather. I'm talking about listings flying off the shelves, and there's just not enough of them. So I'm going to go ahead and jump in and share my screen right now and show you kind of what markets are doing. Mortgage rates right now are almost at 7% again. It's been back and forth in the low sevens, high sixes for some time now. And here's a little comparison or a little chart to show you what's happening in the bond market, because it's been back and forth here for a long time. Then we had the ADP numbers, jobs numbers came out, and keep in mind, the Fed is trying to kill jobs. The Fed wants higher unemployment. That slows down the money supply. That slows down inflation. And last week or a couple of weeks ago, we had the ADP numbers come out, and they were high. A lot of jobs, a lot of new jobs, and it really hurt the bond market. Then we had the inflation numbers come in, and inflation was low, and then we rebounded. And then we had a couple back and forth moments. We had a pretty bad day early last week, and then now we're kind of flat. So what does this mean for mortgage rates, and what is the future? I believe that we're going to be in a tug of war between unemployment numbers and employment numbers, and what the Fed is doing with raising rates to offset inflation. So if you see this right here, unemployment numbers were low, inflation was good, right? So bad. We had a lot of good jobs here. Not a lot of new jobs is bad for rates. Lower inflation, good for rates. I think we're going to have this tug of war for a while. Keep in mind, we have the CHIP Act. We've got the Infrastructure Act. All of these are going to generate more employment, higher incomes, which is wage inflation, which is kind of the enemy of what the Feds are trying to do. They're trying to lower the unemployment. Lower the employment, which is higher unemployment. They're trying to kill jobs. And the administration, the bills that are passed, are actually trying to create jobs. So we've got a tug of war. So I think we're going to see back and forth in a while. The Fed always wins. You don't fight the Fed, if you've ever heard that term. So we will see lower rates in the near future, but that's kind of the tug of war we're in right now. So if you look back on mortgage rates, we're in the high sixes on a standard 30-year fixed. If you've got lower credit scores, your rates would be higher. There are loan level adjustments for a lot of different factors like condos, et cetera. So keep that in mind. This is not the rate everyone gets. 15-year fixed, 6 3/8 or 6.35. 30-year jumbo right just under 7 as well. ARMs are about the same. You're not going to get any benefit with an ARM for the most part. 30-year FHA, you get a little bit of a break there in the mid sixes, and same with VA. So that's kind of where interest rates are for now. So what is going to happen this week? First off, we get the Feds on Wednesday. We believe they're going to raise a quarter. I honestly think that there's going to be 2 more Fed fund raises in the next couple months here. So the Feds are going to raise that a quarter. We're going to be very careful with what rates are doing, because we could see a very volatile week this week. So with that being said, we're going to be floating into that Fed decision and really listening to what Powell says. If he says anything that is beneficial in regards to inflation, like we're excited to see inflation is on its way down, or we're breaking the barriers of stubborn inflation, and we're seeing our efforts really pay off and inflation is coming down. If they say something like that, mortgage rates are going to get better. If they say something like, or if Powell says something like, we're going to have to continue to raise rates, inflation is still a problem, we don't know if we're going to continue for a couple more times, we're unsure of how many times we'll still have to raise, that creates uncertainty. That's going to make mortgage rates have what I call a pretty bad day. So really, it's all about what Powell says, because we all know a quarter is going to be added to the Fed funds rate. So it's going to be interesting this week. Now, a lot of housing data has come out. Did you know that for every listing, there's at least 3.5 offers on that listing at a time? So you're now competing when there's an accepted contract with at least 3 other offers, and that's the average right now across the country. So the market is hot. The market is really picking up, even though rates are high. The problem is inventory. We just don't have very much inventory, and we've got these low rates that people have. Their homes are currently tied to themselves. They're handcuffed to their homes because of these really low rates that they hold. Not a lot of people are interested in getting rid of their 2 or 3% rates and selling to get a higher rate in the 7s on a new home. It just doesn't make sense for a lot of people. So they're holding on to that, and that's stopping those listings from coming to the market. Another piece is true. They are renting their current house and then buying another one because they don't want to get rid of that low rate. So instead of selling it and buying, they're keeping that home, renting it, and then going and buying another home. It's a big trend right now. That's one of the biggest problems we have with inventory, is the fact that people aren't selling their current homes because their rates are so good on those homes and they do not want to get rid of it. So going into this week, we're going to have challenging with inventory. It's hotter than Hades outside, and but people are still buying. The market is still hot. We're seeing contracts come through. So keep at it, and just know that it is challenging when people have rates in the 2s and 3s to get listings. So we do have some blended rate options. We can show how much money they'll make on the renting out of their home when they buy a new one. If they really do not want to move up in the market or upgrade their home, we can show you in the numbers how that can really pan out. So if you have any questions regarding that, let me know. Otherwise, have a fantastic week, guys, and we will be in touch shortly.